Good morning, everybody. This is Jack Gleason with Startuptrading.com. It is 9 o'clock in the morning, June 12th, 2020, Friday here. Economic news in the overnight session out of the Great Britain pound. You had GDP minus 20%. Pretty incredible number right there to think about that. I think pretty sure that's historic. The previous was minus 5.5%. That is just a collapse of Rome right there. 20% drop in the gross domestic product out of the pound. That's amazing. We are going to have University of Michigan consumer sentiment, and then let's just take a look at next week's news events, so we can be aware and prepared. Just the red star ones are the ones I'm mostly concerned with. We have a Powell testimony on Tuesday. That'll definitely be a potential market mover, especially considering the reaction to FOMC and specifically his press conference that we saw yesterday. He came out, said something. Is he going to juice the markets back up? Retail sales, red star news event. The monetary policy statement for the yen is on Monday. That's going to be pretty big. But we do have a pretty packed news event for all of the currencies, the CHF, the Aussie dollar, the Great Britain pound, and then Powell's going to speak again on Friday. So just be aware that only that University of Michigan consumer sentiment number here for the rest of the day. I'm going to just make sure you guys can see my screen all right. I'm going to start off by taking a look at the S&P 500. Now, we have just a reminder, the futures contracts have rolled here on the Thinkorswim chart. So if you are looking at your Thinkorswim chart and you were looking at my Thinkorswim chart and you have not changed back to the June contract, they're going to be totally different. And let me explain that for those of you guys who are new. It is there. We have rolled into from Thursday to the Friday when the new session opens. We change on Thinkorswim to the September contract. You need to type in, and these are on all of the indexes. So I have /ES, the letter M, and then the number 20 or 20. So this is going to keep us only on the June price action. Now, when I go to the only the June contract, the issue becomes the data. The historical data is only for the June contract. So if I look back at 2019, it's quite a thin market. But that's okay. So I want to point out, and we're going to begin just talking about what the support level is that we came into. Yesterday was an absolute bloodbath, our worst day down since the 16th of March. So pretty impressive move lower. And what did we run into? We ran into this extension, this 26.34 half to high. Now this 26.34 half to high was initially our extension that we made this entire move up in. Okay, we held it over and over and over again, and we ran into some negative 61s earlier last week, or actually I think that was traded on Friday. That same anchor new high had a 38% retracement at 3,003. We traded it basically at close. We retested in the overnight session, and then we broke the trend. We broke the trend of the shorts. Now, when we have such an incredible move like this, these bars, the ACR on the 15-minute chart is 8.5 points. That's pretty big. Going into the close, the last extension I had drawn was this 30.80 half to low. That 30.80 half to low broke, and then we had our first 50% retracement in the overnight session. That was a 30.25. 30.25 was front run by 2.25 points. It was a pretty aggressive front run. I mean, they basically bought the halfway back from the session. Okay, we completed those targets. We have what is our 30.27 quarter to high now, and that is our current uptrend. Now, just like on the way down, there really was no knowing where the support is. When you have trends like this, you're not really going to know where support is. There was so many different variations of extension anchors that the only one I want to pay attention to is really the first extension anchor in the full halfway back short. Now, yesterday was most definitely a trend break, and anytime you break trend, you do want to watch where the full 50% retracement short is in the S&P 500. That would be 31.1375. There would be absolutely no surprise if we rallied all the way up to 31.1375 here today. So that is a potential resistance level that we could run into today, maybe Sunday, maybe Monday. We do not know yet. Also, we need to go down to the 5-minute chart to really examine the down sequence in here in the S&P 500. The down sequence actually began in I always look at the first move down that completed on the micro chart, and it's really hard to identify if you don't know what you're looking for, but there was this micro coming into the end of the day that completed targets, and then we had that extension trade off of 38.2. Okay, and then we traded it again in the overnight session, and then this is when the series got pretty wild. This is really when we started blowing out. We never got that same anchor new low again, and then this extension went once to target, twice to target, and then we completely blew through those targets, and then this extension from 31.20 never traded. It never traded. Actually, it traded in the overnight session, but there was a little bit of reaction. I want to go back to just the first extension here that traded, and it's a 32.1 to low. 32.1 to low. And interesting enough, right now you can see that we have reacted, and our current highs are that 38% retracement to the tick. Okay, so what I would anticipate here off the open, number one, everybody was short yesterday, right? Or at least getting stopped out. When we run up through profit targets, our first resistance level we're going to want to look at is this 30.98. And if you guys remember, this is the level that we were holding. Do you guys remember 30.97s yesterday? It was a 30.90, I think it was a 30.97.75 or 30.98. That was our support level in the morning. And as soon as we lost it, it was lights out to the downside, straight down, literally 100 points from that. We lost 30.98, and then we lost 100 points. The lows were then 29.96. So we dropped 100 points from that level. That is going to be our 50% retracement here today. That is going to be our 50% retracement here today. All right, so that is pretty crucial. That is where I'm going to be looking for the resistance to come in. Now, if we break this sequence and trade below 30.45, then what's going to happen is we are going to change trend. We're going to change trend without getting that, and we will just come off this 38.2. Okay, and that's everything for the ES. Now, moving on to the Dow. If you guys remember, yesterday I said if there was any market I'd like to take, it's the Dow. The Dow is a lot easier to see. The Dow had a 50% retracement on Wednesday post FOMC. The ES didn't. The NASDAQ didn't. The Dow did. That low to low, the 38 is the overnight high. It's a 25,774. Well, the 50% retracement is 25,995. And that is the only setup I'm willing to look at. So we are right at one of the setups. We've actually traded it and reacted once, twice. These hourly ATRs are 171 points. I would really be careful picking your levels. I encourage you to trade the micros instead of the E-minis, because the 15-minute ATR, which is the appropriate stop size you would want to take on an hourly level, which is what I would consider this, is 84 points. So it's an 84-point 15-minute ATR, and even if you went to the 5-minute, we're looking at 47 points on the 5-minute chart. Average true range, pretty incredible. Moving on to the NASDAQ. Now, the NASDAQ, let's just watch this sequence out of highs. I'm going to go to the first extension. So we had a 50% retracement short in the NASDAQ on the overnight session going into Thursday. We blew through targets. We went into extensions. Okay, that's the only level I'm interested in here in the NASDAQ is a 98.08 half. 98.08 half. And once again, these can be very sloppy. Our downside targets are 94.78. We have to reconfirm any upside target by breaking the full 61s. That was an official trend break on the prior day. All right. Oil, beast mode to the downside as well yesterday. There was a 10% drop in oil. Now, there is this, I do want to just pay attention to this daily extension that I had mentioned on the prior day. The swing high is May 7th. The swing high is May 7th. All right. That high to high sequence, our 38% retracement is this 35.21. And yesterday we had this extension sequence that was actually in the morning. I had alerted it in the startup trading chat room. The laser setups, we had that extension and completed targets. We had a same anchor new low that completed targets, and that same anchor new low has technically broken. So that's a failed extension trend. Now, this 35.21 is going to be a level, if we retest, I'm going to be looking at, because we broke the extension, so we didn't continue going straight down, there is an hourly leg start right here. Okay, out of the 3 a.m. European Open, we began a bid in oil. So this support level 35.21 is what I'll be looking at. And then as far as resistance goes, the 37.47 is the full 50% retracement short. And then I'm just looking at really the area we broke down. It's just behind that. Like if we do push up through that, there is, I can tell right now just by looking at this market, there's definitely like a 5-minute extension long here that's holding. Okay, and that is from 35.83 to high, it looks like. Yeah, so we have, micro targets that lead us up into the full 50% retracement at 37.47. And then if we get above 37.47, 40, 50 ticks behind that is our next resistance level. Moving on to the USDJPY, there has been a collapse in the USDJPY over the course of the last few days. What I am looking for and what I like to pay attention to is the first extension. I've mentioned this many times. There is this 107.64 is a previous daily leg start long. There's also a 4-hour leg start long. There is a 38.2 of an extension. I'm looking at 107.59 to 107.65 as a resistance level here for the USDJPY today. Moving on to the Aussie dollar, which came right down into, see this purple line? This is a swing mark low from the startup trading studies. Right to it. We've bounced off of it. I also want to just check. There's a trend line that, kind of came into play there as well. I just want to look back and see if there's so we have this traditional coming out of highs. If there's a level that lines up with that. Yeah. You could argue, you're kind of stretching here. I would want to see us break the full 50% retracement short. The full 50% retracement short in the Aussie dollar is definitely a resistance level I'll be watching. That is a 69.32. And there's a possibility that this gets run. But 69.32 is that resistance level I'll be looking for. And then moving on to the euro, which had a really swift move down. We traded a full 50% retracement short from the high of 10 a.m. yesterday, which is when we began our breakdown. That targets a 112.45. And I'm anticipating really the first support level I would have is just like right below that. If we get down to the 112.39s, we'll be retesting Tuesday's low and completing the short target. So that's definitely a level to pay attention to for the euro. And then for the pound, super weak here. Something important to pay attention to in the pound, guys, 20% drop in the gross domestic product of the Great Britain pound. That is absurd. Okay, when the Great Recession of 2009 was going on, the GDP drops were like, I think there were like maybe 7%. Like, and that was terrible. This is 3 times that. So if you want to talk like fundamentals, that is going to affect this currency. It's a miss and it's huge. So we had a short sequence yesterday. The most recent sequence I would look at, I think it's just a halfway back from Thursday's high to low. This is going to target down into the 124.94. So there is probably a micro sequence in here from this low to low, but this pound is very bearish and I don't have any support really until at least the full halfway back long. And if we get through that, we're going to retest the lows of May. Okay, so the pound's move lower here is very important. USD blew through yesterday and it definitely broke. Are moving. Oh, just a quick note. For any of you guys, I've dropped a link in the bottom of this YouTube video with a 2-week free trial. I am doing forex alerts and CFD alerts, which is basically just like derivatives of indexes. I'm just trying to keep it all the same. It works really well with DefTMO. This is the first week I've done this. I've never done something like this before. It's actually a lot of work. I'm like typing in entries and exits and stops and targets on. I've so far this week I've done 20 trades and the total is like 360 pips positive the first week. Now I definitely traded a lot in those alerts, but I encourage you guys, while I have it up, take advantage of the free trial. You just sign up after 2 weeks. It does resubscribe, but you can cancel if you don't think it's helpful. But so far the feedback's been great, and I encourage you guys, while I do have the free trial up, to take advantage of it, because I'm not going to be doing a free trial in the future. I just wanted to kind of test it out myself, but it's going pretty well. So the link is below in this YouTube's description. So yeah, that's what I have for the USD CAD, and then gold and silver. I kind of puked a position in gold yesterday on the low, but we have this extension from the 1701 half to high. Now this has been, it was like here, and then we retested, and then we completed, and then we had the final touch of the 50 right on the close. We have confirmed this upside target. It would be a gift. Actually, let me just move this to get this halfway back at 1738. I would love to see that. We'll see if we can get that 1738 here this morning. All right. And then silver in halfway back from Wednesday. Otherwise, we're just going to retest to 1762, and it's going to, maybe catch a bid when gold catches a bid. If gold can trade that halfway back. But that is going to wrap up this morning's trade plan. If you enjoyed this content, please give this video a thumbs up. Feel free to share it with anybody who you might think. And I'm really enjoying doing the alerts. Take care, and I'll see you guys in the trade room.